How are we doing, friends? And welcome back. It has been another 2 weeks, and we continue to be here as time continues to tick. And I must say, it has made me happy to see, newer people, some more people joining the journey of what is continues to tick. I think a lot of people here, hopefully, like myself, are a believer of time. They like to recognize time and recognize that it passes, recognizes that you have to leverage it, especially when it comes to, seeing a financial return on your life, whether it's directly financial or trying to build up your finances to live that better life in the future. And hopefully the idea is in real time. But sometimes you do have to delay that gratification in order to leverage and double down in order to see that outcome that you desire. I mean, we all have that life, right, that we envision, and then we all have our current life that we live. I say it's okay to have that. I think it's important. I think it's important to realize that where you are today is not where you want to be a couple years from now. I mean, if that's the case and you tend to zoom out with this mindset and look at your life, that is upward trajectory. And the idea is to then implement habits in place that will take you there. But friends, I just want to say thanks for all the people that are new here. And if I could, I'd be here every week, but I figured it's important to have some content, to have something to really speak about, see some progress in the portfolio, and really, to be honest, we're in no rush. We have a lot of time here. I'm 27. I plan to run this portfolio until I reach my own personal financial goals. Right now it's dividends. It will always be dividends, but eventually you'll see another segment, maybe with a different style, where I do start to add some real estate. And I'm really looking forward to that day. That day will come. But friends, another thought that's popped into my mind is, if you've been, maybe curious, you leave a comment down below in the comment section if you would like to see maybe some segments of this video here in podcast form. I haven't done it yet, but if there's some interest, I would definitely consider doing it. I know there's literally nothing to stare at on these videos, but I see that there is interest. Some people are interested in maybe the portfolio itself only, and that's totally fine. But if some people would enjoy a podcast of some sort of this, just let me know. And in particular, friends, in this video, I want to speak about something important. I want to speak about how to identify your retirement goal and 3 things that I've considered. I know I'm only 27, but I've been in the workforce for 4.5 years now. And since before I even started the workforce, friends, and I hope a lot of you have this same mindset, is how do I afford to not work anymore? Like, that is the ultimate end goal, and it should be. I tend to come from the vantage point that entering the workforce should be seen as an inconvenience. You do your time and you get out. Don't get stuck in it. A lot of people enter the workforce thinking that's something they have to do. Well, something you should do is try to find a way to escape. Maybe find a way to work for yourself, get your time back in some fashion as you continue to build wealth. For me, I work as an RN. I don't have my own company. I work for an employer. I exchange my time for money, and I continue to do that. But knowing that that's the career I entered, I'm trying to find other hobbies on the side that maybe potentially hold the opportunity to maybe pull me out of that, right? But either way, friends, you have to understand that this workforce is an inconvenience. And don't you forget that. If you look ahead of you, you'll see way too many people get stuck in this workforce for way too long. And that's because of poor planning. Sure, maybe you can't find an opportunity to pull yourself out. But now if you also poorly plan for your retirement, you're going to stay in it way longer than you need to. If you're working till the age of 65, friends, 60, upper 50s, you've probably done something wrong. You probably didn't invest right. If you're still working at a necessity around that age, you likely did something wrong, or something in your life happened to you as a poor outcome to something. But if you plan accordingly, friends, I'm a believer that you could be done around the age of 50, if not earlier than that, or a little bit past 50. And that is my goal. And that is why I want to help you identify your retirement goal today and share with you 3 things that I've considered. So let's move along here. So as far as the 3 things, friends, here they are. The first one is quality of life. And I like to break it down in the terms of the Porsche Panamera or the Toyota Camry. And I'll explain as we, get to it here. The second one is drive, not the car, but the person. And then the third one is being realistic. Are you being honest? Process your answer here. So starting with quality of life, friends. This is very important. A lot of you in the FIRE movement, you've probably already thought of this. Do you need a FIRE? Do you need a fat FIRE? Fat FIRE is having more money in abundance for financially independent retire early in that movement. Having just a FIRE is, just having money to retire, to live passively, not have to go into the workforce like we were speaking about earlier. Retirement is ultimately a FIRE movement. Everybody will eventually go into FIRE, either through your 401k or your pension plan or some form of real estate getting paid to you passively. The idea is to eventually replace your day-to-day income, your month-to-month income, with income that is passive now. Income that you have worked hard in the background for that now has stepped up to the forefront to be your main income. When it comes to planning for retirement, friends, you have to think about what quality of life do you want to live. This will tell you a lot of these other factors as you go along for your plan. Do you want to live in abundance? Do you want a house bigger than the one you currently live in? Do you want to drive that Porsche Panamera, or are you okay driving that Toyota Camry? The Porsche Panamera is living in abundance, friends. It is having extra. It is living better later than when you live today. Living better in retirement than when you worked in the workforce. It is eating the fruits of your labor. It is understanding that you worked hard for something and you want to live greater and more comfortable in your golden years. That is the Porsche Panamera. And you might likely be able to afford a car like a Porsche Panamera or some other, luxury car of your choice, and it won't affect you. Live in that bigger house and it won't affect you. Living the quality life of the Toyota Camry, however, is having just a car, is having just a house. It's not necessarily living in abundance, but living with just your needs, living with just your comforts. You're okay just living an average, normal life in the Toyota Camry. And there's nothing wrong with that. There's a lot of people who don't necessarily, strive for more, and we'll get to that in the next step. So there's nothing wrong with wanting to drive that Toyota Camry. That's a great quality of life. There's nothing wrong with that. For me, as an example, friends, I don't want just a house. I don't want just a car. I don't want to just live a comfortable life. I want to live in a little bit more of abundance than when I currently lived or how I currently lived in the workforce. I want to be the one that eats the fruits of my labor, especially in my golden years. I, for example, want the Porsche Panamera. And maybe I'll still have my old Toyota Camry from when I drove it in my workforce, but I don't want to always stay as a Toyota Camry. I want to eventually level up and live in that phase and that level of driving that Porsche Panamera. So quality of life is important, friends, because the main idea with this is how much is going to be your expense to live that life that you envision in your retirement years. Living a Porsche Panamera is going to require more income in your retirement to sustain than living that Toyota Camry life to sustain. The Toyota Camry may be paid off already into your golden years. Maybe you still have a car payment or two on your Porsche Panamera, living that quality of life. So it's just one important thing to consider, friends. And I like to think about it in this way. So one important thing for you having to dive deep into and decide is your quality of life. How do you want to live in retirement? And now for the second one, friends, drive. Not the car that I'm speaking about, but the person. So we just spoke about what type of quality of life do you want to live. As you can imagine, living a life of driving the Porsche Panamera is going to require more of a drive when you're in the workforce and after, as opposed to living that life of the Toyota Camry. The difference in price in these cars, the difference in price in these lifestyles is going to be pretty noticeable. And if you did things wrong, one is going to be either achievable or not. And if you did things right, friends, one will be achievable, but it'll still require some drive to sustain, some smart moves to sustain. Drive is very important. You can want that Porsche Panamera life, but if you don't have the drive behind you, fueling you to push yourself forward to get it, We can want all we want, but the reality is we're not going to get it. Drive is very important because it keeps you disciplined. It keeps you motivated. It keeps you on the path and the trajectory to get that outcome of the Porsche Panamera that you want. Sometimes, and I'm not saying it's a bad thing, we take life as it comes and we get things out of, complacency. We just get things that come to us. Oftentimes that life, those choices result in that Toyota Camry life into retirement. It doesn't require much drive to just kind of show up. But to show up and then show out, it does require drive. So that's why drive is very important. So when you're thinking of retirement, think of the drive level that you have, because there's nothing wrong with not having the drive. But make sure if you don't have the drive that it aligns with that retirement that you want. If you're someone with the low drive, you're okay just getting things as they come. You're not really into making those future plans and, aligning your ducks in a row to get that outcome. The outcome that you're going to get is, that house, that car, and retirement. Maybe some vacations every once in a while, but not too often. Or if you do get vacations, the quality of them is just going to be lower or middle. But friends, if you have the drive and you have the energy, you have the dedication, you have the motivation, you have the inspiration in yourself, you inspire yourself, you have grit, and you want more in retirement, use and leverage that drive just like you use and leverage time. And maybe instead of living that Toyota Camry life, you'll live a Porsche Panamera life. You decide, you choose, this is your life. This is your life, my friend. And then as far as for the third one, being realistic. So this kind of goes in conjunction with the quality of life and the drive. The third one is being realistic. Are you being honest when it comes to your retirement plans? And process your answer here. The day is going to come, friends, when reality will strike. You're either going to have the outcome that you envisioned this whole time and you will obtain it, or the time is going to come where you're going to realize that you're going to fall short on this plan and you're never going to reach it. So you got to be honest and be realistic. I mean, we all want to retire maybe by the age of 35 or the age of 40, but is that realistic? Are you on the path for that? Does the drive match? And does your current living situation, your current income match that outcome? You got to be honest. For me, friends, even though I have drive, I take life in base hits. I'm not one to swing for the fences, and that's just me being honest with myself. I prefer a base hit life, hitting base hit after base hit after base hit. And by that, I mean making smart choices, keeping them sustainable, marking off these boxes as I go over time. I'm not one to swing hard and miss, and then swing hard and miss, and then swing hard and finally hit one and just have it be one that's a home run and it gets me to where I want to go. It requires maybe a little bit of luck, but a little bit of patience. And it's a different type of risk. And it's not a risk that I enjoy living within. But I'm being honest. I'm being realistic that isn't the way that I do things. So in this third step here, friends, and being realistic with yourself, that quality of life, that Porsche Panamera lifestyle, is it realistically in your current path, in your current trajectory of this life? And you got to ask yourself and you got to answer that question. And if it's not on your path, friends, you got to accept the fact that you're going to live that Toyota Camry life, and that would be your reality. And there's nothing wrong with it. I only say that because sometimes it takes a little longer to process the fact that our life is not going to turn out as to how we truly wanted. If we would have done this life over again, maybe we would have done things differently. But the reality is, friends, we all get this same one life with the same time. And if you don't plan ahead, the outcome you get of complacency is the one you get based on living a complacent life. And that is just fact. But if you're someone who has the drive and the risk, you can be honest and say, hey, I got some time here. I'm going to go for it. And if I hit it, great. I love it. If I don't hit it, I got to live with it. So those are 3 things, friends, that I've considered when I've come to plan for my retirement: quality of life, the drive, being realistic. Hopefully you guys can see that, when it comes to finances on my channel, I don't really speak on data. I speak on life. I speak on experiences. I speak on choices. Slightly different from a lot of other channels, but hopefully it can still connect with you guys. Because don't get me wrong, I still show you numbers. I'm going to show you some right now. And of course, friends, like I just said, speaking on numbers, here's the Jesse's cash flow portfolio. Every single 2 weeks, I'm going to show this to you either through a very deep monthly portfolio review or just a weekly portfolio review where we talk about some topics and we move along, we chug along. This is time. This is time moving. All right, I'll stop. But friends, as you can see, we've dropped down a bit, and that's okay. This portfolio is not going to be in an upward trajectory every single week, every single month. The market will move how it moves, but the question is, are you moving with the market? If the market goes down a bit, are you kind of there? If the market's moving up, are you there? That is the main thing that I focus on. And that always gives me reassurance because it goes to show that my portfolio, the way I structured it, is in alignment with the market. So as the market over 5 years, over a decade, over 2 decades, as that continues to go up, so does my portfolio. That is what matters to me the most, especially as a dividend investor. Being a dividend investor, friends, you're going to recognize that what matters is the dividends being paid out. Sure, we want to see growth, we want to see green, but even when the markets are red, let me remind you, that's okay. Your portfolio is going to be red, and that's okay. What you're worried about is those dividend payouts. And if you've invested in blue chip company stocks, you're likely still going to be okay even in a down market. I would even go far to say in down markets, a lot of people like to invest for passive income. They like to invest in companies that pay a dividend. So you're probably going to be okay on both sides. But with that said, friends, this is the all-time chart here. And we have a return of 26.12% with a total return of $9,559.30. And if we zoom in here, friends, you can see from market gain, it's 5,787. And then from earned dividends, it continues to go up and up over time. $3,771 is where we're at currently. And that's always a very nice sight to see. I'd imagine the same for your portfolio if you've done it for a while or longer than me. This number's going to be higher. That's all-time earned dividends getting paid out. And if you're curious, let's see the year to date. So the year to date looks pretty good. I mean, there was a point where it didn't start too hot, right? We were in February here and we started to go down quite a bit. And I didn't know exactly how it would play out for the year, but ever since March, the end of March, it has continued to go up. And it wasn't until again recently we saw a little dip back down. But overall for the year, friends, it says 6.86% return. I will take that in any given year, especially as weird as the economy has felt. I will take it. I know the year isn't over, but I mean, it feels good right now. It feels pretty good, I would say. This is with the return of $4,461. And as far as year to date, my earned dividends total so far has been $1,133. We did the dividend portfolio review a while ago, and I think our anticipated earned dividends for the year is about $2,000. So we'll continue to see how it plays out. And as far as the last month, it was relatively flat. Return of 0.32%. No red. I will take it. Just going back to the all-time chart here, friends, let's see some of the best performers. Tech continues to outperform all the other sectors in my portfolio, and I think a lot of it still has to do with NVIDIA, but surprisingly, it's also Oracle. Oracle looks like it has almost twice as much of a return for me than my Apple does, which is interesting. And then Visa is at the bottom here of them. Still in the green, of course, but at the bottom. And then apart from tech, we have energy, we have consumer discretionary, financials. And as we continue to move down, the ones that are in the red currently are utilities, real estate, healthcare, and communications. Real estate's an interesting one. I don't know how you guys have felt lately, but I really felt like the market did go down a bit, but now it has kind of stopped going down and it seemed to have stabilized. I know there's pockets here and there that never really fell, but there are pockets that are actually now kind of coming back up, and it's a little interesting. I mean, I live in California. Real estate is still very expensive. Rents are still expensive. Everything is expensive. I mean, but the reality is, friends, it's hard to predict these things. You may think that, hey, the economy doesn't align. There's things that don't align right now, but it doesn't matter. Sometimes the markets continue to move because there's so many things involved. Policy is one, politics is another. Sometimes you just got to plan ahead and watch out for yourself and have some long-term plans as you move along. I'm still continuing to plan to, buy my first rental property, hopefully by the age of 30. I'm 27 today, so I'll be 28 later this year. That is my goal still as I continue to do this. And that's why I only continue to funnel $100 into this portfolio currently every single week at this time. It used to be $500, and eventually it will again. Hopefully once I reach the age of 30, hit this heavy again with dividends. But hopefully by the age of 30, I'll have this portfolio be the size of $100,000. That is the idea. That is the plan. But as always, friends, thank you guys for watching. I always enjoy making these videos. If you stayed up to this point in the video, you can always follow my second channel if you want to see more, often uploads. I upload multiple times a week there. It's called ContinuesToImprove. Also, make sure to check out my Instagram. I post there every single day. I show you some of my daily habits, which is 1, waking up at 5 a.m. every single day, and 2, working out every single day in some shape, way, or form. So follow them. Another thing, for those that stick all the way to the very end, in about 1 month, I'm going to be in Greece in 1 month. And I'm so excited. It's my first time going international like that. My first time in Greece, certainly. And I'm looking forward to it. I think I will make some videos about it when I'm there. I'll probably have to make a financial video when I'm there. So we'll see how that pans out. But just letting you guys know, that'll be on the horizon if you wanted to follow me as I upload while I'm there. But either way, friends, recognize that this time continues to tick. That is time passing. What are you doing with your time? Ask yourself, what are you doing with your time? And I'll see you on the next one. And until then, take care.